Happy Wednesday, everybody. Bonjourne. Guten Tag, guten Abend. It's 8:02 a.m. Chicago time on the 24th of January 2018. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Where does the market stand? Markets allocating to risk. This morning, the Euro Stoxx 50 is interestingly unchanged. Pretty good volume in there. With the British pound, gold, Japanese yen, and the euro leading the pack on my board today, on my quote board today. The S&P is higher, trading at 2848.50 from a close of 2839.50. It's up 9 points, basically 8.5, 9 points. Another day where we have a 9-point gap. I've said this again and again over the last few weeks. It's just kind of a repeat. These trader bites are a way of kind of being in a bunker together, a foxhole together, trading this market. But really, it's the same process day in, day out. It's either a day of imbalance and we're pushing hard, or a day of balance with a skew where we have a P shape and we're pushing upwards, but in a balanced way, which was basically what we saw yesterday. And so that's where we are. Okay. As far as what we're looking for in terms of economic releases, news, things like that. What is up with this calendar? It did not update. Bad. Well, you all have calendars. Let me take a quick look at another. Don't like it when that calendar does not update. Looks like we have existing home sales at 10. We have at 9:45 Eastern, we have the January preliminary market composite. At 10, we have existing home sales. 10:30, we have crude oil. And then we have a 2-year FRN auction at 11:30 and a 5-year note auction at 1. Not seeing much in terms of speakers and so on, but that's what we've got. Now let's take a look at what we had planned for yesterday. Yesterday, as those of you who attended heard me say, it's a toss-up. Yesterday's play is a toss-up. We're expecting a somewhat balanced. We're looking for the high to be taken out, but we're looking for a balanced session, and it could balance by going down, then pushing up through the high, and then balancing for the rest of the session, or it could push high and then drop, which is scenario 1 shown here. To balance for the rest of the session. As I said yesterday, I'm expecting to be trading from the outside in coming into yesterday's session. Although we had an interestingly strong open, we ended up having an outside in session for the most part. So not a huge fan of the way this thing's trading right now, so I look at other products. But if you are just learning futures, or if you're not consistent yet and are working out your execution and other issues, I do not recommend bouncing between products. Okay? The secondary plan is what worked out. The secondary plan was looking for a drop towards 28.28. Or thereabouts, at least the last support, the LVN area, for an impulse up right there, for a push through the high, and then balancing out for the rest of the day. So we're looking for a balanced profile with the way things were shaping up. Here's what actually happened versus what I expected. This is what we got. We got a nice clean opening swing right there. Push up, So we took out the high, the all-time high for a new all-time high. We end up with this. We ended up with this impulsive move down with a pullback to the mid, which was a classic short setup for me. But I did not want to, I knew I did not want to overstay it. Why? Because we already did that test. So if anything on the short, I was looking only for a modest push to 28.28 before it starts to move back up, as it always does, or it has been. And so it didn't give much and ended up scratching this trade completely. And then we ended up pushing through the IB high with a range extension up. But as I said, the expectation yesterday was for the market to push the high, then fail back through, push the high and fail back through. So yesterday was about catching, looking to catch those highs for a pullback to mid, and that worked out twice, actually. Twice, but you have to be prepared to take a loss there, as the market may turn directional or trending, and there's just no way to predict that that's going to happen. You got to keep an eye on what is happening with the delta. That's what I do. You notice on my charts, I don't have any oscillators. I don't have any moving averages or anything. I'm not saying you shouldn't trade with them or anything like that. I'm not endorsing them or discouraging them. However, I started out trading naked, just actually point and figure charts and fibs and things like that. And then I added a market profile, and then I didn't like market profile much. After a while, I moved to volume profiling. I started to look at the volume on my TT Xtrader Pro screen and notice certain market behavior at the high volume versus low volume nodes. So I started to come up with this whole idea of volume profiling. I'm sure others did too, but that's the structure I created. And now I'm a volume profile based trader as a core, because I'm looking at the auction with the volume profile. The volume profile is telling me what the auction is doing at each price level, but I'm also a price action trader. And so when you look at what I'm looking at here on my trigger chart, this is a chart I use to trigger with. I'm simply looking at the delta here, and the delta is just a volume delta or a volume imbalance. This is measuring the aggressor on the buy side versus the aggressor on the sell side. It's summing them. This chart here, this pane here, breaks up the aggressor, the delta, breaking up the delta into large and small lots based on a statistical study. And then the bottom pane is just taking the rotations. So you notice this is a 5.5 point rotation, and you'll see the same figure showing up down here. So this is not an oscillator. It is simply measuring the rotations, and this is a very important part of the chart. It helps me see what the rotations are doing. Those of you who have never heard me talk before in various webinars, the rotations are much more important to me than the price action, than the higher high, lower low, lower high, higher low. That stuff is not as important as how it's rotating. So if I combine rotational values, right, knowing what the harmonic rotation is, and combine the rotational values with how the volume's coming in, that's all I need. If I had to strip everything down, that would be those three components would be all I need. The volume profile, so I can see where the volume is, the rotations, and how aggressive those rotations are. The only problem with the delta is that you have to account for rollover. It just doesn't accurately represent the market as volume comes in to move into another contract. So what do we have yesterday? New all-time highs, range extension up, normal variation day. A very clean, somewhat skewed Gaussian profile. Beautiful volume profile with a very clear value area. So that's what we left. We left the market closing inside of the IB, just above the opening swing, above the mid, against the point of control, against the VWAP. And that's that the market basically finished at new all-time highs in balance. That's the status we left our trading session with. Coming into today, this morning, we open up, we sell off, and we go sideways completely until the European Treasury open, at which point we start to trend up. We have somewhat of a double distribution profile. Volume's about 1.5 times the norm. So take that into account. But the overall trade since the European Open is a channel up. We have not retested the mid. We have not retested VWAP overnight. We're above the point of control. We're above yesterday's high. The market's coming in strong again. So what does that translate to for us? As we come into today, same old, same old. We're not opening in range in value. However, I'm expecting an open auction that gets responsive. I'm looking for the market to drop towards 28.4250, 28.4250 for the bounce above the high of yesterday, which was 28.4475, the all-time high, consolidate, and push up. And then once it pushes up, takes out the overnight high, I expect it to consolidate. I'm looking for another fairly balanced day as the primary trade. So how do we translate that? We translate that into an outside-in trade. So I'm looking for the response. I'm going to wait for this response to happen, this response down. And then I'm looking for the reaction on my order flow. I'm looking for the reaction as the market approaches the prior day's value high. So this is going to be a value high trade. If it slips through the value high, I'm off it. And I'm waiting for the next indication as to what the next big rotation is. If it stays in value for a while, meaning an entire bracket, a half hour or so, then I'm looking for it to take a trip down to value low, 28.3750. So I'm looking to lean against value high for a push to value low if that happens. However, the primary scenario here is to see the market push. Now remember what this looks like, okay? We come off of the open auction out of range. We're gapping up, move towards 28.4250, looking for a stable base. Looking for a stable base to get long. Then it gets long. We get stuck at the mid for a little bit, maybe the opening swing for a little bit. And then I'm looking for that to resolve to the upside. Once we push through the overnight high, the IB stat should be done by then. The overnight high should be done by then, or is likely to be done. I hate the word should in trading, or must. It's likely to be done by then. And then we're looking for the market to settle in the middle, and that'll be the big trade of the day. So what does that look like? So 28.4250 is down here. 28.4250 is right down here. So once we open and the market starts to shift into through yesterday's high, which is right here, previous day's high, you should have these. If you have the software, you should have these same levels coming in from my server. 28.4475. So I'm looking for large orders to show up here. I'm looking for this to turn white, blue, white, yellow, then orange. And then as we push lower, I'm looking for more and more yellow and orange to come in. And if it comes in and we start to print and put in big dots on the bid, boom, 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 hitting, but the market's not making progress, kind of like I'm sure everybody here knows what a jackhammer is. A jackhammer is what construction workers use to break up concrete. Now imagine a jackhammer. Imagine a person holding that jackhammer, and they're going through soft stone, and then it becomes harder stone like granite, and then it hits steel. So what you would notice then is you would notice that the jackhammer is no longer making any progress, and there's a lot of shock going into that worker's arms, and he has to stop. He or she has to stop and let go. And that's really the best kind of image I can conjure right now for what I'm looking for how I'm reading the order flow. As it pushes lower and it hammers and hammers and hammers. If the base is strong enough, if this is as strong as steel down here, eventually what happens is those people who sold and don't see progress will start to cover, and then you get a quick pop. I'm looking to enter before that happens. So I'm looking for how it makes progress into that 28, 42, 50 or before it. And I'm looking to scale in. If it's a wide area, if this area becomes all orange, then I'll break up the trade into quarters or eighths or something. And I'm looking for it to get in slowly. And then eventually what happens is it just cannot make any progress. And then you have the weak hands covering to buy long. And when they cover to buy long, you get something that looks like this, a quick pop like that. Okay, and then it just pops up. By the time it pops up, those last few stops from the weak hands should be filling my risk scale out, and then that should drop my theoretical average from the 28, probably somewhere around 28.43, 43 quarter average. It should drop to below 28.42, and at that point I can sit and relax and then start working the opening swing high, start working the mid, and so on for scale out, so that I can improve my theoretical average as the market moves up. If the market turns over and comes back to my entry, that means that low is relatively weak because we're revisiting. It's not an excess low, and I'm out. Okay, so that's what that looks like. Again, I want to bring the theory of what we expect into action, right? Into what we'll do. So we're looking for a test, a jackhammer type of response, then a burst, consolidate, overnight high, and then balance out for the rest of the day, just like it did yesterday, just sideways. That's one. The secondary is we open in an open auction that gets initiative, meaning what does initiative mean? Initiative means it's moving away from prior accepted value. Okay, so we're moving away. We're initiating new price discovery away from the prior accepted area. What is the prior accepted area? The point of control and value area. So responsive is moving back towards the most recent value area, and initiative means moving away. Okay, so we initially get initiative, then we fail, retest like we did yesterday, fail, and then close this little gap and hold steady. I don't expect it to dig in too much into yesterday's profile on the secondary scenario. But if it does get initiative, I can't do anything. I can't, as a trader, I know my weakness, and my weakness is trend into new all-time highs. I just have no plan for that. I don't have any reference levels. I don't have anything to trade against, so I don't trade. And so that's where you have to meditate on your FOMO response, this fear of missing out. I got to get in here, the Bitcoin response. So I'm trained to do that because I've seen myself sink a few $100,000 on stupid trades doing that stuff. So I just don't do anything. I'll look at crude. I'll look at other areas if there are setups there, if I'm getting alerts, audible alerts in those areas. Okay, so that's what we've got. I want to issue this reminder. Don't come in here every day into the market and just waste your time. So every day you must do what you must know what you need to do today to win the day. It's really important to come in every day knowing that, oh, okay, it's another gap up, it's another new all-time high, blah, 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 and just sit there and kind of look at YouTube videos of kitty cats or whatever. That's not what we want to do here. We want to come in every day and work on some weakness that we have or some part of our execution that isn't working out. This is your job. This is your practice. When this thing breaks, and it's eventually going to be a seller's market, when this thing breaks, you better have your skill set honed to press the gas and take advantage of volatility when that happens. I'm not saying we only make money when we're selling. We make money on the upside as well, but when it does break, you don't want to be at that point working on your FOMO problems or your need to be right or your need to be your need to have affirmation from the market that you're a man or a great person or a woman or a trader or whatever. All of that stuff should be behind you. It should be very solid in the game, in the flow. And that's why every day you must figure out what you need to do to win the day. I know I'm lecturing here, but it's really important. This is what I've told my traders every single day in prop. They were great traders for it. And it's something I strongly believe in, and I want to relay that to you. Good luck.